So you are thinking about moving to the North Dallas area, the North Texas area? Well, normally in the videos that you see with us on them, we're giving you tours of neighborhoods in the North Dallas area, of model homes and things like that. Well, in this video, we wanted to talk to you about the potential of lower interest rates coming maybe this summer, sometime later this year, and what that means for you.
So I'm Brandon Fowler, and this is my wife Jen, and we both together run Fowler Realty Team here in the North Texas area.
Yep, he's usually the one behind the camera, but today he's going to join me, and we are going to talk about what is on every potential home buyer's mind, and that is affordability, housing prices, and
interest rates.
Yeah. Yes.
We just got done talking with an economist from the University of North Texas here in Denton, and really talking about what's going on with the economy and how that is affecting all aspects from unemployment, for interest rates in the mortgage, and interest rates in banking, and everything that goes into that, and really what's affecting the economy.
And he had his predictions last year, and he showed us what he had predicted would happen in 2023 and what actually happened. And he was pretty spot on.
Yeah, he wasn't that far off.
Yeah. So according to the economist that we talked to today, he's expecting rates to start dropping around August 2024 and continuing to come down. So we wanted to talk a little bit about what that looks like, what that means for the consumer, for you as a home buyer, because experience from 2021 when rates were really low and sellers just really weren't selling, we were at an all-time low inventory level, what happened and what that meant for home buyers. So we kind of want to talk a little bit about that. And also I want to say, we're not going to sit here and say, this is the best time to buy a house. Buy a house today, buy a house today. It might not be a good time for you. For a lot of people, we're telling them, hey, if you're in a good place financially and you can do that, we say this is a good time for you, and we're going to tell you why. This is a good time for home buyers that are ready, that can afford the mortgage to buy when rates are still higher than where they're predicted to be. So we also want to preface this by saying we're not lenders.
We're not economists.
We're not economists, right, babe?
We're real estate professionals.
Yeah, we're real estate professionals.
We're talking to economists, and we're talking to lenders, and we're watching the news and what's going on in the market.
Yeah, so we are not quoting rates. We are not telling you what the actual rate is today or where it's actually going to be, but we do want to base a couple of things off, base a couple of numbers off of what's happening today and what we see coming.
Yeah, so right now we're seeing rates around 7%. Okay. And the economist today is thinking they may get into the 5s, which would be awesome.
So we're going to say 7% today, and let's say 5.5% in August by the end of the year. Actually, I don't think they'll be that low in August, but at some point.
Probably
so we're going to
talk
some numbers and we're going to use those two numbers when we talk about mortgage. It's no secret, affordability is at an all-time low right now. Rates are high, and the home prices didn't come down like everyone thought they were going to. In fact, they're still increasing, and especially here in North Texas. He actually talked about the numbers he was giving were national numbers, but he said when it comes to Texas
is in a much better place than the rest of the nation.
So if you're thinking about moving to North Texas, most economists will tell you we're just in a better position economically, especially in North Texas. We're not insulated by any means from recession, but we don't seem to get hit as hard as
the job market here is good. The amount of businesses that are moving from other states to Texas, and specifically North Texas and the Dallas-Fort Worth Metroplex. So it's definitely a good place for business, and where businesses come, those that work for those businesses traditionally come here and they bring jobs here. So that's a good thing.
Was it every 3.3 minutes someone's moving to Texas? Every 3.3 minutes.
That's nuts.
Someone's moving to Texas. So.
Yes, and we definitely see it. When we get on the roads, us local Denton people, we're like, oh my goodness, where'd all these people come from? But it's a good economy. It's a good place to live. It's a great place to raise your family.
So we have affordability at an all-time low. So what happens when rates come down to a much better place than they are now? Well, it's going to increase affordability by a lot. I was just reading, according to Business Insider, that as of December 2022, so over a year ago, it was 26 million people have been priced out of the market. 26
really?
million
For real?
home buyers
For real?
are priced out of the market.
That's a lot.
That's a
That's
lot.
a lot of people.
It is a lot.
That's a lot of people.
So we're talking about rates coming down, affordability finally going up, which is great. So we're seeing that as rates come down, affordability is going to go up, and that's awesome.
I mean, so we all know the economy works on supply and demand. As the demand goes up, the supply goes down and vice versa. And so the demand for housing, as interest rates come down, the demand's just going to go right back up. And all of those home buyers, those 26 million that have been sitting on the sidelines waiting for their opportunity, well, as soon as the rates drop, they're going to get back in the market. On top of the ones that are already in the market looking.
Right,
and
that's true.
Supply is still low. It's not the supply is probably not ever gonna catch up, honestly.
Yeah, we're several million homes short here in America. So
and even, I mean, he even talked about new construction, how the new construction, the building of new homes isn't remotely close to ever catching up.
So we've got increased affordability, that's great. Now we have increased demand, not so great. So what does it mean to have an increased demand and increased affordability and lower rates? Well, higher housing. So houses are they've already been doing this, you know, a little bit during this. Well, now they're going to continue to go up. And that could mean more competition for home buyers as 26 million now enter the market to purchase a home. So with competition comes overbidding.
Yeah.
And man, we saw that in 2021 big time.
We did.
People were overbidding by
25%.
Minimum 10% is what we were saying. So let's talk about, plug some numbers in to mortgage calculator and see how that affordability increases, what your mortgage would be today compared to when rates are lower. And also, because today we're seeing home prices, you know, we've got buyers who are getting in under list price.
We are.
What else are sellers doing?
Buyers are getting concessions, so sellers are having to offer incentives on their home. Yeah,
we're seeing up to sometimes $10,000 offered in what's called either buyer incentives or seller concessions. Basically, that's money given to you as a buyer from the seller.
So that's less money that you're bringing to the table.
Yeah. So we're seeing that right now. Well, as we saw in 2021, none of that was happening. Buyers were overbidding by 10 to 20%. They were not getting any help from the seller.
No, buyers were
getting
going
repairs.
Without option periods or inspections.
Well, yeah. So in Texas, we have our due diligence is called an option period. Some of them are even foregoing an inspection, which we would never recommend to forego an inspection. Right. But that's what was happening. And I guess, you know, what we're trying to say is, look, if rates ever get down to 5% or even lower than that, we could see that coming back because there are buyers in 2021 who had the money, the extra money, put down on the house in order to overbid. Yeah. But they kept losing and losing and losing.
I mean, we had one buyer interested in a $400,000 house. They overbid by $100,000 and lost.
So we don't want that to happen again.
No,
we don't want that to happen again.
Your money is better spent and used by you keeping it in the bank rather than putting it in your house, because once it's in your house, like you can't just go get it.
It's there till you sell it. It's there till you sell it.
Right.
So yeah, lower rates are going to have an impact on home prices. We're going to see more competition. We're going to see overbidding, and we're still in low inventory, like you said.
We are.
And you know, a lot of new construction right now, they're offering a lot of great incentives. Those will start to go away as well,
right?
Because they won't have any reason. Because they'll have a lot of buyers.
Right.
But it's also important to note that, you know, the housing market is influenced by a lot of factors. You've got economic conditions, unemployment rates.
Yeah. So much goes into the economy and how it affects all aspects. The price of oil, the price of homes, the price of consumer goods. So everything is affected.
Yeah. Inventory levels. That's right. Consumer, you know.
I mean, he really talked about inflation, and we've all seen that. The price of going to the grocery store and buying gas and buying things that we normally buy now. Our grandparents would lose it based on the prices of things right now, even homes. So
we're not making predictions here. We're just telling you what we've seen. You know, consumer confidence is not high right now. Well, once rates come down, we're going to see that confidence go back up. So But there are also other factors besides interest rate that
Yeah.
do affect the housing
Sure,
market.
sure.
So the average home price, or the median home price in
Mhm.
the US right now in 2024 is about $420,000.
Yeah.
So we're going to use that number to take a look at what your mortgage would be today at 7% versus at 5.5%. Kind of give our opinion on both.
Yeah. Let's just see where those numbers take us.
Okay, so 420,000. We're going
Right.
to say conventional loan at 5% down.
Mhm.
5%. By the way, you don't need 20% down.
Right.
Whoever told you that, that's not true. Conventional loan 5%. If you go FHA, 3.5%. You could put 3% down on a conventional loan if you qualify. That's for the lenders. That's not my lane, but I do know those numbers. Okay, so $420,000 home. You're putting 5% down. That's $21,000. Unless you put 20% down, everybody has to pay mortgage insurance. It's called PMI. So you've got that included in your mortgage. You've got taxes. So we're going to do taxes here in North Texas. We're going to base it on that, on your average home. I put $6,000.
It's probably
gonna
more
be
than
more
that,
than
but
that.
we'll use that number.
Yeah, but property taxes, that's yearly. That's paid through your mortgage. What else do you have?
And then homeowners insurance, which we're seeing those rates go up too.
Yeah.
So,
But I put $2,400 a year for that. And then more than likely you'll have an HOA. Let's say $50 a month. That could range anywhere. Honestly, we're seeing HOAs from $600 a year up to $1,200, $1,500, just depending on what kind of community you live in.
but the HOA is not part of your mortgage.
That is true.
But when you do buy a house,
Yeah.
you do have to pay that.
Yes. So $420,000 house, 7% interest rate, you're putting 5% down. That leaves you with a monthly mortgage payment of around $3,570. I'm also going to say it's likely that if that house has been on the market for a while, like Brandon was talking about earlier, the seller might help you pay a little bit of your closing costs. And that $420,000 house might actually be, maybe you can get it for $410 or even $400. Just depends on how long it's been on the market.
Yeah.
But we'll say your mortgage is about, what did I say, $3,570?
So your taxes and insurance will stay the same. So those are normal regardless of your interest rate. So at a 5.5 interest rate, you're probably looking at about $3,181. So a difference of $389. Yeah.
Okay?
Yeah.
That's a pretty good savings. I wouldn't mind
Yeah.
having a mortgage that's $389 less. I mean, that's
Sure.
half a car payment. For some people, that is a car payment. That's groceries. That's
a lot.
You save that for a year, that's a darn good vacation.
It is. It is. We go to Mexico on that.
Yeah, but here's the flip side of that. Rates are at 5%, rates are at 5.5%. That $420,000 house, that's what the seller's asking $420 for, right?
Mm-hmm.
What we saw happen in 2021 is that house is now going to probably sell for around $450,000.
So $30,000
more. And guess what? It's probably not going to appraise for $450 because the house next door that just sold, or maybe a house hasn't sold in several months in that neighborhood. So the appraiser's going to say, well, your neighbor's house sold for $420. This house is worth $420.
Right. $420.
Mr. and Mrs. Buyer, the seller's going to say, no, you pay $450 because remember how many offers we got?
Right.
They all wanted to pay $450.
If you don't want it, we have people
Yes.
waiting.
So you got to pay $450.
Right.
Well, if it appraises at $420, you're offering to pay $450.
Right.
That means you have to come to closing with an additional $30,000.
Because your lender won't let you borrow more than the home is appraised for.
Exactly. So we're really simplifying it here, very much simplifying it, but this is what we saw happen in 2021. So let's take the $389 that you're saving on a lower rate.
Mm-hmm. Okay.
How long would it take
To get to
to
$30,000.
get to $30,000 that you had to take out of your bank and give to the seller? They overspent by $30,000 and that's
Okay.
gone from their bank account, right?
Okay. Right.
But this buyer over here bought the house for $420, got seller concessions, got
Right.
repairs, but their mortgage is $389 more a month.
Mm-hmm.
That's a lot.
Yeah.
How long would it take them to get to $30,000? Spending $389 a month. How many months?
77 months.
77 months. That's 6.5 years, about roughly 6.5
Yeah.
years. So guess what we're trying to tell you is
Right.
it's somewhat of a wash. You're going to spend the money every month with a higher mortgage, or you're going to have a great mortgage. It's going to be $389 less, but you just had to give away $30,000
of your hard-earned money.
that you don't get back until you sell the home.
Right.
Is it the right time to buy? It might be. If you can afford that kind of mortgage, that it might be the right time to buy. You'd say, well, why? Interest rates are going to go down, so why buy now? Well,
Because the home price is going to go
Home
up.
prices are going to go up. And here's another thing. If you ever hear someone say, what is it, marry the house and date the rate?
Right.
Oh, I don't like that.
No,
I don't like that
no
because I think we're oversimplifying this. That is a major oversimplification because there's a couple of factors that go into that. Rates may or may not drop.
Right.
What if they stay at 7% forever? What if they go up?
Mm-hmm.
Well, if they go up and you bought, you're in a good position.
Right.
But what happens is when you go to refinance, you still have to qualify, just like you had to qualify when you bought the home.
Right.
Well, what happens when people buy houses? What do they usually do?
We're usually right side up.
Well, no, but what happens? You buy that house and then your furniture doesn't look so pretty.
Oh yeah, we're gonna, you know what we're gonna do? We're gonna go to Nebraska Furniture Mart. We're gonna open up a credit card.
Nebraska Furniture Mart. Okay, for those of you that are not in North Texas, because they're not everywhere, are they?
I don't know where they're at, but
you'll love it.
It's like Costco, but for your interior decorating.
Yeah.
Yeah.
Anyway.
Side note. Yeah. But if you go to Nebraska Furniture Mart and you go buy all the furniture and things, and then I'm gonna go buy a new car. I'm gonna go buy appliances for the house.
Yes.
Well, now you've spent.
But we want to go refinance.
But you know what, Mr. Buyer,
Mr.
Homeowner, you don't qualify anymore because now you have a Nebraska Furniture Mart payment, you have a car payment, you have an appliance payment, and now you don't qualify to refi.
So please don't listen to that, marry the house and date the rate, because we're not saying when rates come down, we're saying if they come down.
Correct.
So they have to come down, you still have to qualify. So, but that's why we say, hey, if you can afford the mortgage today, the economists, the forecasters, the way things are headed, all say rates are coming down. So if they come down and you still qualify, then you can refinance into that lower rate and you get that $389 a month saving and you kept $30,000 in your bank.
Right.
Because you didn't overbid on the house.
Right.
We just, we were so encouraged by what we heard today. I know this economy lately has been tough on everybody.
Yeah. And it was nice to be able to sit down and have a conversation like this with a local economist rather than watching the doom and gloom on the news and you hear all of those different things, but to be able to ask questions and him give his professional opinion because he's been an economist his whole life,
and
so he really understands.
How many countries did he name that he?
They stopped naming them because it was so many.
It was so many.
20 plus.
Oh, it had to be.
And some they wouldn't even say because they couldn't get the name right.
Yes. Yeah.
But it's just super encouraging to talk with someone that watches all aspects of the economy. And he is encouraged. He does see progress coming. So
yes, it's
and
slow
we want
progress.
slow progress
because
if the rates were 5.5% tomorrow, everybody's going to empty their bank account to buy a house.
Yes,
everybody's going to come out. And that's what happened. In 2020 is all of a sudden the rates are 3. Now I can afford $200,000 more of a house.
And so. Back to talking about people being priced out of the market, I do believe that there are a lot of people completely priced out. They're done. However, some people are only priced out of the house they want.
Yeah.
And so, for some people, we've had several buyers say, we're going to get into the house that we can afford today because we know in 5 years, we believe what's going to happen in 5 years.
You look historically at home prices and appreciation has over the long haul always gone up 3 to 4% a year, even though we do have ups and downs. Well, if you buy a house today, theoretically in 4 to 5 years, you're going to have
some equity in the home,
built up, and then you know what you can do? You can take that equity out, sell your house, and buy the dream house, or stair step till you get to that dream house by building equity and appreciation in your home.
Yeah, so it might not be that you're priced out of the market. You're probably just priced out of the price range you wanted to be in. So there is that as well. But we're encouraged about what's coming up. Tell us your thoughts. I know this is a very controversial topic. There's a lot of differing opinions on it. This is just what we're hearing. This is what we are seeing. This is what we experienced with our clients during the height of 2021, and then what we're experiencing with them today. And we're already seeing buyers having more confidence even at the rates we are seeing today, because they're looking for those homes that have been on the market for a while. But here's another thing we're seeing. We're already seeing multiple offers, and what's happening is when houses have been sitting for 60 days, all of a sudden they have that price drop. And when that price drop hits,
every agent that has shown that house and everybody that has saved that search in Zillow or Realtor or on their MLS, all of a sudden everybody gets a notification.
And so we're seeing multiple offers.
Let's go check it out.
Yeah, so this isn't going to be the right time for the majority of people, and that is okay. We say wait around for those rates to come down, but make sure you have cash in case there is competition again. Make sure you save that
honestly, it's never too early to have the conversation about buying a house.
Absolutely.
We can plan out 6 months, a year, even 2 years. Work with a lender that can help you make your credit even better so that you qualify for, a better rate on a loan. So
information is power. We truly believe that if you're even thinking about moving, that you really need to talk, find a trusted realtor to talk to that has built relationships with trusted lenders, so you can all partner together and have a plan for buying a home rather than just going off of headlines that you see on social media.
If those headlines disturb you, or you're like, oh my God, how is that possible? Pick up the phone, call, text, email us, and let's talk about the reality of that, because there's so many different things going out there in the media where they just want you to click and it's all this doom and gloom, and it's really not that way. You just need to be informed, and that's what we want to do.
Well, I'd love to know your opinions on this. I'd love to see the comment section. And like I said, this is just what we're hearing. So we wanted to just share that with y'all. Like I said earlier, we are real estate professionals here in the North Dallas area. We have people just like you reaching out to us all the time. And they're looking to move here. We love it. We love helping y'all. We love guiding you through the process of moving to the great state of Texas. So if you have
Did you know that Texas is the only state that can fly its flag at the same level of the United States flag? No other state can do that. I'm a Texan at heart and not going anywhere. So anyway, fun fact.
But hey, we're so thankful that you are following us and that you watch our videos. Make sure you subscribe. It's free to you. It doesn't cost you anything, but man, it really helps us out. So we'd love for you to like and subscribe, leave a comment, and hey, we'll see you on the next one.